What's going on, you guys, and welcome back to another trading recap. Today is going to be kind of a rough day. Working with the last buying power I had after losing the Spotify trade and making it back on Wednesday going into Thursday. I used the remaining buying power, which was a total portfolio value of around $560. And I went ahead and leveraged majority of the portfolio, maybe around 90% of the portfolio's value. I really did this to try to create more space between my current capital position and just stepping it up. I didn't mind risking the what was left of the portfolio to try to clear maybe 50, 60, 70% on it. We had a lot of volatility in SPY today. I felt like we had a really strong point of resistance for around 683 all morning long, and I'll be pointing that out later on in the video. And really taking the risk with this much in portfolio value and understanding also the contract I was trading. It was a zero DTE. So a zero DTE, for those of you guys that don't um, never heard the term or don't understand what it means, let me explain. So zero DTE contracts, it's just an abbreviation to describe 0 days till expiration, meaning that you don't have 24 hours or then another trading session to go ahead and ride with these contracts. It's a one trading session contract, meaning that at the end of the market at 1 p.m. Pacific Standard Time, these contracts will expire at either a profit or a loss, and you have to sell them. So, understanding that I was in these zero DTE calls, I was aware that zero DTE puts, I believe, just to kind of add a little bit more context. Um, I was aware that theta was going to be very aggressive. Now, I don't have much experience in trading zero DTE calls, but I am aware that in 0 days till expiration, theta has to be moving much more aggressively compared to if I had 2-3 days till expiration, like a normal 5 day swing that or intraday trade that I would do. So taking this into consideration, I got a little bit scared. I was gonna lose more of the contracts or the more of the entire portfolio's value, really, because the contracts value were just a reflection of the portfolio at the end of the day with how much it is I had invested into the contracts. And yeah, it was a real big hit. I think we ended up walking away with minus 68%, but my decision making was right. The lesson from today was really reflecting on maybe holding the position a bit more longer, following my narrative, and just believing a bit more in the trade. Why? Because later on in the day it did happen, but I think being a little bit less frightened in the theta would be helpful. Um, I guess, being down negative 70%, might as well at that point just let it ride for trying to target a lower loss. I would say instead of going out of this trade with negative 68%, I could have targeted maybe a negative 40, 30%. And in that time waiting to take those, that, minimize that loss, I probably would have been able to spot this opportunity in the movement of the movement and how the chart was moving to see this big drop at the end of the day, or right before, I would say like 11:30 we had a really big spike down that I was already in, but just happened a little bit after me. Let me go ahead and show it to you guys. This one was crazy, bro. Trade kind of beat me up a little bit just because I had some really good momentum coming off those losses, but it is what it is. We still have something to play with tomorrow, so I'm trying to share this with you guys. So we have SPY right here, just so you guys know. This is SPY chart for today. I'll go ahead and bring it up for you guys. So this is SPY's chart. Let me go ahead and bring the stream over to this. And then I can go ahead and bring SPY chart up now. And then bring SPY chart over here. One second. Nice. Now we got it. Sorry for that technical error there. All right, let's go ahead and jump into today's market. So I would just want to show you guys this example of like going into trading with a strategy. Sorry. It's important that you guys see opportunity in overbought assets and oversold assets in a rapid time. So whenever something is overbought, for example, pre-market, we had a really big jump from 684 up to 685.60. That really big jump right there, that's the overbought scenario. Now, when something's overbought, it usually tends to correct or come back somewhat down in value. So I would say, expecting somewhat, looking at it from top to bottom, somewhere maybe like around negative 40% would be a good place to, target some sort of a correction here. So now removing this very small, what's up, man? Now removing this very small kind of consolidation that we got right at market open, we dropped immediately, correcting majority of this value. So now compare this to pre-market. Sorry, I had a friend walk in. From previous pre-market from yesterday, look at this. When this was oversold, I had this already marked, but when this was already oversold, look at what happened. It corrected back up. And it corrected back up because it was oversold, undervalued. More importantly, it was undervalued. Investors seen value in it. And today you would have been able to find this whole correction and more really before the trading day ended. So just a little example of how to, use targeting an oversold or overbought scenario as a resource to kind of build a little bit more of a narrative or a mind frame and decision making behind the trade, so you understand how maybe the markets are being, if a market's, let's say like someone gives you a head start. If you're the person in the front, meaning that like maybe you're overbought, it's probably a bad example. Just when things are overbought, they tend to come back down something, not all the way down like we did here, early pre-market buy, correction even below. That, might not always happen, but it's always safe to say, hey, there's going to be somewhat of a correction here. Same thing with an oversold scenario. If the asset is trading lower very aggressively, it's going to be sooner or later that now it starts trading higher. So that's just important that you guys, just notice that perception of value in these scenarios. Now let's go ahead and jump into how I woke up a little bit later in the day, around 9:30. So I noticed the market a little bit late, but I was able to spot, first things first, this clear oversold scenario. We had a trend building up until we broke it right around here. We had some consolidation, and then the market jumped up, pumped down, finally truly breaking it over here. Once we broke that trend, I was like, okay, let's go ahead and see where's the ceiling. Ceiling is also known, as resistance. Resistance is a point where a stock comes up and gets pushed back down. So we had this point of resistance. Boom, we started developing some more support. So now we're building up points of support from previous history right here. And we're also getting points of support now over here, a little bit over here. So now we're seeing, okay, we're building up some support. Now that we establish a support and technically a resistance, we can start analyzing when is it that we're going to hit these ceilings and make money on the bounces off. Because that's where you find your value. That's where we make our money as traders. We make our money as traders from here, top, to the bottom. Or, bottom to top. So you're always targeting these gaps here in the middle as your profit. And that's where you get your percentages from, depending on how big of a range you have. So now understanding that we have a resistance, a support, now it's time to watch as either we break a resistance or as we seen that I literally was going for a break of support. So today, unfortunately, we got a break of resistance, and I was in puts targeting a break of support. So I'm gonna go ahead and share with you guys now when it is we entered. Seeing we have a resistance, seeing where our support is. I'm like here, okay, boom, we got a good rejection off again at 684. Boom, another good rejection off. Boom, another good rejection off, and boom, another good rejection off. You now have 1, 2, 3, 4, 5. Let's keep on going. 6 points of rejection off of this 684.30 resistance. until we finally break. Now, remember at the beginning of the video, I told you data was something that I was really scared of, and losing the rest of the account, was my biggest fear, and really not helping, but impacting my decision making for sure, playing a good factor there, was losing this account and just losing the rest of the position to data, assuming we were going to target these 685 numbers. Now, my mistake here, I would argue, was not being patient enough to maybe see if at point 70, negative 70%, it's not like you're going to save much. You're not going to save a fortune of the position, but when you go ahead and maybe let it come down even to a point 50, a point 40, well, now you're saving, 60%, 50% of the position. That's more tolerable somewhat, very high risk, of course, but more tolerable than, just taking a negative 70 loss if you want to round it up. So I guess that was my fault today. If the position's already negative 70, I think also my perception and understanding and awareness of where we were in the market, meaning that this was around 10:45, 11:30 max. That time frame, this was when we were like still early in the day. We had like around 3 hours left of the market, and I don't know, data was just ringing in my ears like, watch out, don't blow this if it goes to 685. And I guess my mindset just wasn't all there, and I ended up taking a loss here. But when we entered, let me explain to you now the entries. Man, this is crazy. So I started seeing first. Let me like clean this up for some beginners, bro. This might look insane. So like starting from scratch, right? Let's make this quicker. Boom. We have a naked chart, right? So we immediately have this first bear trend. We have some consolidation here, but it's building some support, and then we got our consistent resistance up here. So I'm just gonna make these lines to make it easier for you guys to understand. Boom, and then boom. All right, perfect. So now, once we broke this bearish trend, I'm looking for us to develop a bullish trend. So over here, we went for another point off of resistance. Wow, coming down, found our support again, found our support again, found our support again, came up off of resistance, found our support again, and now continuing to target this resistance until finally we got our trend. Something that broke. So I'm waiting for put options to find a trend going lower. I wanted to see this support break lower. And when in targeting that, we go ahead and zoom into it. Once I seen, keep in mind, 1, 2, 3, 4, 5, and then 6. The 6th hit, right? I was entered here. Stop loss is right around under the support. Sorry, that's a long position, short position. I was in shorts. This was my huge mistake today. Stop loss is around here, targeting this previous point of support. Why? Because I'm trying to get a rejection off resistance and catch that whole move from resistance now back down to support, as it previously did earlier in the day. Just as a reference, clarification here. Boom, resistance. So to support, support to resistance, resistance to borderline support. Now resistance, broke resistance, back down to below support. So we see that that downside outweighs the positive side, right? And I was waiting for this move all day long, but the only time I was ever profitable in the position was right here, and then once again right over here. Nope. Nope. I remember now. Over here was the second time I was profitable. This was the first time, and now this was the whole hope story. Once it started climbing up here, we're negative 40%. Now once we drop back down, I'm like, amazing, we're about to come back in the money. Boom. Didn't really get in the green, like it was plus $22 because I had 11 contracts at $19 that I bought them for. So boom, come back down, find our support. Now I'm back in the green right here. Maybe like 148, so maybe like 40%. I didn't take it because I'm like, finally, this is, our point off resistance. We're going to better drop back down below support and I'm a profit here. Or this is about to rally up, as you guys probably seen in my earlier illustrations. So cleaning this chart up quick because it looks pretty crazy. Once I seen I was already in the losses, I was like, okay, this might have to hit off resistance and now hit back down. I'm in this trade now 15 minutes. I'm like, okay, let's hit this resistance. Nothing. Found some support. Started climbing out above support. And me knowing that previously we were targeting 685, and that's really our really bull target right now, 685. I was like, that's it. It's gonna run to 685. I'm gonna lose the whole account in one day. And I wasn't conscious of where I was in the time of the trading day. And there you go. I called it a little bit too early, because as I left and I went to just go start my day, look at, if I would have just held a little bit longer, let's say theta did take my position, maybe I had to start becoming profitable by a bull by down here. I still would have caught. Where's my measuring tool? There she is. I still would have caught from here all the way here, minus 2%. That would have been amazing, bro. I did the math, 300% would have done that $540 investment into $1,550. 300%. It went from $19 a contract to $189 a contract. And instead I walked out with negative 330 when I could have walked out with positive 1550. So one for sure hell of a trade, real like wake up call, and maybe believing in myself a bit more and not being as afraid to theta and practicing conscious, like being more aware, practicing awareness of where I am in the trading day and how much more time we have until market close. I genuinely think, that could have for sure made me today, and we would have had a much more exciting challenge to now take this, 500. Now we're working with 2 grand, 1500 plus the other 540 I used in buying power. Now you're looking at 2 grand. I could have leveraged then 500, 600, 700 into Thursday and Friday, maybe done 50% on that, 350 added, 2300. Now we're taking, 2300 out of those 2300, boom, maybe 800, 900 risking them, and it's not me no longer risking 80%, 90% of my total value to just break out of capital. Now the returns are much more realistic, much more something you can, look at, hey, I can use this to create a better situation in my life, this type of money. Once you're making an extra 300, 400 in a day, that's when these returns are more like, hey, like it's worth taking. You're not questioning, oh, I want more in value, when the percentage is already at like 70%. It's when you start playing with high capital that all of this starts, aligning for yourself. But the hardest part is playing up to that capital, because maybe you're like myself, wanting to just break out of there quickly, and it doesn't go your way. And when you risk too much, you also lose too much. So it happens. But, genuinely, that was, I guess, the lessons from today that I learned. And yeah, we have around $241 left in buying power. I started with 188, so we're just gonna play it conservatively and try to get, some really good trades in Thursday and Friday. See if we even keep this challenge alive. And if we don't keep this challenge alive, man, we'll just have to start from scratch and take the loss. 500 to 10,000 fail, and I think it really just comes down to getting used to these 0 DTE. Using SPY Tuesday and Wednesday to, make these substantial returns in percentage. It was something to get used to with how volatile and how these contracts fluctuate in value so quickly. But I hope you guys enjoyed this market recap. It was a little bit of lessons you guys could learn. I wish you guys all the very best. Thank you guys for watching. Leave a like and subscribe. Jerry Trades of SoCal Trading Group. Over and out, my boy.